Madam Pratiksha, my colleague and my senior fast friend, Dr. Vibhakar from Mumbai. A warm welcome to you all on very interesting topic, the taxation for doctors by a renowned speakers, CA, Mrs. Pratiksha. Now may I request Dr. Prabhakar, please introduce to the speaker. Dr. Vibhakar, sir.
Good afternoon, friends. In today's webinar of tax planning for family physicians, we will be discussing presumptive taxation, required books of accounts, necessary records for audit, and to enlighten us on these topics, we have speaker, chartered accountant, Madam Pratiksha Patni. Madam Patni has experience of more than 5 years and has been working with KPCA and company chartered accountant. Her expertise is in taxation, auditing, and financial management, particularly within the healthcare sector. She has worked closely with numerous medical practitioners, guiding them through the intricacies of tax laws and helping them optimize their financial practices. I am sure we are going to benefit tremendously from Madam Patni. Madam Patni, please.
Thank you, sir. Can I start?
Sure.
Yeah. Today we are here to discuss about the taxation for doctors. In that we will
Yes, you're audible.
yeah, I'm not able to change my slide.
You can click between, just working.
So today's agenda is to what books and records need to be maintained by doctors, the presumptive taxation for doctors, and their scenario analysis, and how we can save the tax on our income. So the first thing is books and record. As per section 44 AA of income tax, books need to be maintained for a profession whose income is gross receipts is more than 1,50,000. In this, there are specified professions which include doctors. And second criteria over there is if your turnover is more than 10 lakhs and income is more than 1,20,000 for non-specified professions. The person who falls under this category needs to maintain books of account. The books of account which we need to maintain is sales register, purchase register, cash and bank book, journal ledger, inventory of medicines, invoice and vouchers. And basic records, this need to be maintained by everyone. Like even we fall under this category of 1,20,000 and turnover is more than 10 lakhs, or gross receipts are more than 1,50,000. The records of cash memos, bills, cash book, daily case register, copies of purchase bill. Now, if we opt for presumptive taxation, then only books of records need to be maintained. And if we don't opt for presumptive taxation, we need to maintain books of record as well as books of accounts. And this books of account, books of record, we need to maintain for next 8 years. Like if we are in March 24, we need to maintain the books of account for next 8 years. It is compulsory to maintain 8 years books of account as per Income Tax Act. The next topic is presumptive taxation for doctors. There are two sections of presumptive taxation as per Income Tax Act, that is section 44 AD and ADA, 44 ADA. There are many more sections in presumptive taxation, but as per today's session, we are covering only 44 AD and ADA. This section 44 AD, is applicable to individual, Hindu undivided family, and partnership firm. Type of income covered under section 44 AD is business income. Threshold limit is if the turnover of a business is less than 3 CR, then we can avail the benefit of section 44 AD. The presumptive taxable income is 8% of gross turnover. Like if the turnover of business is 2 crore, then 2 crore, 8% of 2 crore rupees. We can show more than 8% also, and the minimum percentage is 8%. We need to show under section 44 AD. For doctors, which business are covered under section 44 AD? The diagnosis center, medical store, hospital operating revenue, other than IPD, OPD. Next section, section 44 ADA of presumptive taxation. Section 44 ADA is applicable to individual partnership firm. Here, HUF is not covered because it is an artificial person, and an artificial person cannot provide a professional services. Then the type of income covered under section 44 ADA is professional receipts. The receipts where the professional skills are used while performing services is covered under section 44 ADA. The threshold limit for 44 ADA is 75 lakh, which was earlier 50 lakhs. For March 24, it is 75 lakh rupees. The income which we need to show is 50% of gross receipts. The business here are covered is the consultancy services like OPD, procedure fees, royalty fees, technical and academic fees. For say, if a doctor is also teaching in a medical hospital, so his receipts will be covered under section 44 ADA. Then, if we analyze a scenario where a doctor has an income of 75 lakhs, and as we are providing services 75 lakhs from outpatient services at his private clinic, which includes all his income like consulting, x-ray, physiotherapy. However, the expenses is only 10 lakhs. So the taxation of this scenario under normal taxation would be the gross receipt will be 75 lakhs. The expenses are of 10 lakhs. As we are in service industry, the expenses are not that much as compared to business. So the next net taxable income will be 65 lakhs. And the tax liability will be 18 lakhs. So the tax liability under normal taxation would be 18 lakhs. But the same case, if we opt for presumptive scheme, like section 44 ADA, the gross receipt is 75 lakhs. Straight away, we can claim deduction under section 44 ADA, 37 lakh 50,000. So the net taxable income will be 37 lakh 50,000, and the tax liability will be 9 lakhs. So why there is so much difference is this is because of the surcharge. Straight away we need to pay surcharge of 10% as the income is more than 50 lakhs over the normal taxation, and under presumptive taxation the income is less than 50 lakhs. For the same income we can save around 50% of the tax liability. If we analysis the next scenario, that is a doctor whose income is 1,20,000, the gross receipt from IPD and OPD. However, the operational expenses will be 30 lakhs. So if we go by normal taxation, the the income of 1.2 cr and the expenses including all the depreciation, consultancy fees, purchases, consumables, salary, then it will be 30 lakhs. The profit arising from that will be 90 lakhs, and tax on that will be 27 lakh 50,000. So for tax planning purpose, if we split this 1 crore 20 lakhs into individual and two partnership firm, where we need to keep 75 lakhs and 75 lakhs in two entities, and in one we can post balancing figure. Okay, and then we can claim expenses in this one entity of actual expenses, and for rest two entities we can claim section 44 ADA deductions. So the tax under the tax planning thing is 11 lakh 50,000, whereas in normal taxation it will be 27 lakh 50,000.
Pratiksha, I have several questions as we prepared this case study for general practitioners. If you can go back to the previous slide, the same case study ka details wala slide, case study for general practitioners. This is
Yes.
what I wanted to highlight to the audience and Dr. Vibhakar as well, because Dr. Vibhakar's feedback last time was that he wanted to see the case study which was specific to the general practitioner. We decided that we will include this specific case study here, where 1.2 CR is the outpatient service, and let's say there is a clinic expense of 30 lakh. Then what happens in usual case, and what happens if there is a another entity created? So that is what we had requested Pratiksha to kind of share light on. And now, Pratiksha, if I may ask that, if there is a doctor who has his own clinic and OPD income predominantly coming 1.2 CR, and there is only one entity, he has not created any other LLP, private limited, anything else. Everything is in the proprietary name. 1.2 CR is currently booked in the proprietary name. And the real expense, actual expense of the clinic, that is 30 lakh, that is, kind of shown into the ITR computation of income part. So the tax liability comes quite high, which you now shown that it is 27 lakh and 50,000. If I just see percentage wise, that's also nearly 20 percentage on the
Yes.
gross income after deducting everything.
Yeah.
But what does the person do? Is it okay to create LLP with the family member, or what are the steps to be taken next? Because you have clearly shown that how mathematics help you in this fashion, but what are the real steps the person has to take now?
Person first need to form a partnership firm with the family members and bifurcate his income according to the slab. Like if here we see we have bifurcated the 1.2 cr into three entities. The for doctor himself 75 lakh, where he can claim deduction under section 44 ADA. He can avail the benefit of section 44 ADA. Straight away, his tax will be on 37 lakh 50,000. The first thing, this bifurcation will depend upon assessee to assessee, but this is the option we can take. We can bifurcate income. For example, we can just bifurcate income into his name and his spouse name, 75 lakh and 75 lakh. If he's not working and he's a doctor, she's a doctor.
So what if the spouse is a doctor and the spouse is not a doctor? Does the case vary? Does the solution vary?
Yes, because being a doctor, you can only provide a service of general physician. Like,
But the partnership can be done with the non-doctor spouse as well.
yes, no partner, yeah, it can be, because we can show over there.
Business income can be shown in the non-doctor spouse partnership as well.
Exactly. Like if we have a medical store over there, which is run by doctor, in the name of doctor, then we can show that income as in partnership firm, and in that we can claim 8% profit on that, because
Understood.
it's a business.
So at what point a general practitioner should decide that they should now not be limited to just one proprietary entity and start LLP? Is it the answer
Till
is as early as possible, or you have to wait for certain time?
Till 75 lakh rupees we can wait. Over above, we need to split. We should split our income in different type of like, thing.
Yes, Dr. Vivakar.
Because when you enter into a partnership, there would be double taxation or not. Individual partners would be taxed as at the firm level and again at the individual level. So that scenario also we have to consider, no?
So the profit from partnership firm is exempt in the hand of partners. Only the remuneration thing, which we can take deduction under partnership firm, is taxable in hands of partner.
So as an individual, whatever comes from the partnership, whatever share comes from the partnership firm is not taxable.
No, the profit is exempt in the hand of partners.
Oh.
That definitely helps. And 75 lakh, you said that till that time one should wait, but above 75 lakh turnover, it is better to go for partnership firm.
Partnership firm, or we can split our income. Like it's a tax planning. It will depend upon assessee to assessee.
And a family member does not have to be a doctor. That's clear for anyone.
Yes, depend upon the income again.
Understood. You mean that if the spouse is also a doctor, then both of them will have their own proprietary consulting?
Yes, then we can
And
claim
then-
75 lakh in individual names, and over then we can form another entity.
Madam, but if we are considering only the medical practice, can we enter into a partnership with a non-medical spouse?
No.
Or it's only for the other services, like
Other
say,
services, sir.
diagnostic services
Yes,
or
yes,
some such thing.
exactly.
Yeah. So you need to have a source of income which is beyond the clinical practice
Yes.
to avail of this kind of partnership.
Yes, sir.
Pratiksha, just one more question there. Let's say I am a doctor and my spouse is non-doctor.
Yeah.
And I have my consulting practice running. I can avail the consulting services and earn the income, and on my proprietary name, I can show the income. If I enter in a partnership with my non-doctor spouse, what if a patient comes to me, an OPD patient,
Hmm.
and let's say my total consultation charge is 500 rupees, for example.
Yes.
Uh, can I split that income also as one income being my consultation and the one portion of the income being the clinic's income and not my consulting income?
No, we can't. Like
Okay.
Vibhakar sir said, we need to distribute the income into pathology income, and the pathology income will be run under a partnership firm.
Mhm.
The service is provided by the doctor and not by non-doctor. So that income need to be clubbed under the name of doctor.
If the clinical business income under LLP, if can they charge like appointment booking income, facilitation income, to make, because the patient comes in the premises, the clinic has to kind of accommodate the patient. The receptionist has to at times talk to the patient, make the patient understand the requirement. That also is a service. May not be the doctor's consultation bit, but it is also a part of service. So can that exercise be considered as a service being provided to the patient, which is not a consulting service, but can that be also be part of LLP income?
That we need to check as per the law of doctors. Like income tax does not say anything about that, but while charging fees you need to doctor need to check the law and that.
Understood. I have a couple of questions on the audit part as well.
Yes.
So based on your experience, what is the portion of the bookkeeping and accounting or the record keeping part doctors face most challenge with?
Okay. Like a doctor need to maintain one account for his personal thing and one for business. The multiple of bank account maintained by doctor, at many times we face problems in that. Then the proper books of account is not maintained, like the receipt books which we issue to patient, that are handwritten receipts. The software need to be implemented over there, that will give a doctor a clear picture what is our income and what is actual income per se. This, and doctor need to do tax planning in advance so that we can plan and save the tax accordingly. If we maintain proper books of account, we can correctly plan our tax, and we can correctly pay our tax further.
We have seen that the doctors also go for a lot of continuous learning parts as well. At times they go for some courses for which they also kind of incur expenses.
Yes.
So that continuous education expenses, any other training that they have in some stream they want, then can that be adjusted in their income?
If we take advantage of section 44 ADA, then the 50% of turnover, the 50% which we are claiming as a deduction or benefit of section 44 ADA, that expenses are covered under that only 50%. Like any expenses will be covered under that 50%. And other than that, if we are not opting for 44 ADA, then it is covered as a business expenses or profession expenses.
I would also encourage the audience to also put up this their questions in the chat box, their
Uh,
YouTube. And meanwhile, sir, yeah, you please go on.
Madam, we were supposed to maintain one 3C register once upon a time. Is that still required to be maintained? And if yes, what is the limit beyond which it is supposed to be maintained?
Sir, which register?
3C register. There
3C.
used Yeah, 3C register. There was a pattern laid down by the income tax department: name of the patient, number of the patient, kind of services, money paid or not. That kind of a register existed. Does that kind of register as part of the books of account still exist?
So we need to maintain cell register if we are a professional receipts is more than 1,50,000 as per income tax act. So the register which you are saying and the content is similar to that only.
Yeah, but there was a special name given to it, namely 3C register.
Form
And it
3C.
was yeah,
Form
and it was
3C.
it was designed by the income tax department only. So that I wanted to know whether it is still existent or it has done away with.
Sir, I will check and get back to you on this.
If I can also share the screen. So Form 3C we can also see on the screen. So it's clear for all the audience as well.
One more thing that I have observed is that these days when we are filing the return, and we are not going for the presumptive one, but the regular one, when the taxable income, professional taxable income is less than 50% of the gross receipts, you just can't move forward. It just stops there. Unless the professional income shown as more than 50%, then only you can proceed. That is what I have experienced.
Sir, in that case, if our professional income is less than 50%, we need to maintain books of account.
Yeah, so if you have
So
mentioned that you are maintaining books of accounts, even then, I don't know, somehow I have had this problem in a doctor's.
no, sir. Like if we fill balance sheet and P&L, then this error will not come.
So,
Provided your income is more than 2,50,000 basic exemption limit, so you will not face the problem.
Yes, any question if we have from the audience, most welcome. And feel free to type on the chat box. Meanwhile, Dr. Vibhakar, Dr. Vinod, please ask as many questions as you feel will be benefited from for the audience, because you are experienced general practitioners. There are so many young GPs who also would have more questions, and you have traversed that period in your younger years, and you have seen that what problems you faced and how you have resolved that. So those questions, if you feel that it will be beneficial for the younger members of your community, you can also ask on their behalf as well. Sir, you are on mute. Dr. Vibhakar.
વિનોદભાઈ ને કહું છું કે કઈ હોય તો જણાવે.
नहीं साहब, आपने when in case of family physician and consultant, there are totally two different entities. In family physician, when we have to make the partnership deed, I think how we can accommodate our partner or wife. My wife is a non-medical.
Same
So
thing.
what I have made, I am paying her 20,000 rupees per month for her supervision and extra services.
Yeah.
That's all.
That's
I'm
all.
not
But you can't incorporate as a partner. That is the problem.
Because it is a professional skill that can be only we are giving and going to give to our patient. So I don't think for consultant there are so many different sources of the income also, like laboratory, like X-ray, and so many other things, sir. For family physician, the scenario is altogether different.
At the most, if the premises is in the wife's name, you can give some rent,
Rent.
and you, yeah, out of proportion also, if you give, you can still give. There is no limit to. If, I mean, it has got to be logically okay.
Sure, sir. Any more questions on that front? Pratiksha, any experience you want to share which helped family physician based on your firm's advice?
No, as such, like nothing.
But I think the most questions were regarding the partnership and the presumptive taxation part, which and the bookkeeping as well. That we had tried to address. If there is no further question, I also want to kind of recap little bit of our first 2 to 3 sessions, how this taxation is part of the series organized by FFPI and Finovate. So I would put that also in perspective. If sir there are no more questions, otherwise I'm happy to wait. Okay, I'll share my screen, sir. So in the first two session, we had discussed that in the personal finance for any doctor, there are 6 key areas one has to look at. The first session was involving the goal planning approach. The second and the today's session, the third one, we focused on the taxation part. Today is more exclusively for general practitioner. And in the previous one, we had also included, how a consultancy income can also be incorporated for taxation planning. And in the goal planning, if I just want to recap for 2-3 minutes. We talked about the FIRE number, and FIRE number is financial independence, retire early. Retire early means you have to have the privilege to retire early. Otherwise, we are very much happy if the senior doctor continues practicing. But the doctor will not have to earn for the sake of income. They can just earn. They can just do the practice to serve the society. The income will not be needed for their goals. So that is the stage when we reach. We call it we have achieved the FIRE. And I had given the example in the first session, that if let's say a general practitioner is at the age of 40 and the retirement age is 60, the accumulated corpus so far by the age of 40, let's say it is 75 lakh, and yearly a doctor, let's say, is able to invest 10 lakh every year and put together all the goals, the FIRE number comes 17 crore. How does FIRE number comes 17 crore? The son's education, you undergraduate, postgraduate put together, inflated value may come 7 to 10, 8 CR. Today's MBBS may cost little less, but postgraduate may cost 1 CR plus. And if the son is in the age bracket of, let's say, 8 to 10 years, because here the example of the GP is at the age 40. So let's say the son's age is 10. The son would go for undergraduate and postgraduate after a decade. At that time, the cost may be quite high. Son's wedding is also there. Let's say there is a new house purchase goal as well. All the goals put together throughout the life may require, in this case, 17 CR. Now the journey starts from 75 lakh to reach to 17 CR. And the doctor has also said that he wants to be able to retire, or he wants to be able to work without worrying about income at the age 60. So from 75 lakh to 17 CR, that journey requires the CAGR of 16.38%. So this gives a lot of clarity in planning their financial life. So whatever investment decisions a doctor has to take, that should be keeping in mind that his target CAGR is 16.38. So that also solves two problems. He will not invest into the investments which are giving little less or quite a less return just to be conservative. He will also not be very aggressive to target much higher returns than this. There is an optimal point of returns that everyone should target. For this person, this is the return to target to fulfill the life goals, meaning to achieve the fire purpose. That is what we had discussed in the first session. And the next two sessions, as I said, was on the taxation plan. For taxation, I'm also very much happy to receive any query that the audience share to the FFPI committee members and they pass on to us. We are more than happy to take it offline as well. The next few sessions that we want to cover would talk about investments, insurance planning. At times, GPs also take loan to build the clinic or to expand the clinic, to make it to upgrade the clinic. Then how to prepay the loans quickly. For our senior general practitioners, the most interesting topic is also estate planning. They have worked their life serving patients and also have created wealth legacy. Now, how to pass on that legacy effectively without putting the nears and the loved ones into so much hassle of legalities and complexities? What is the right structure to create so that the legacy created can be passed very effectively? That we will cover into estate planning. So we will soon share that out of this four, investments is the most interesting for everyone as well as little lengthy as well. We are quite happy to kind of demarcate 2-3 sessions in investment, but I will also speak to committee members that out of the remaining four, whichever they want to start first, we will organize a special session for them with a renowned speaker of that domain, and we will have the questions answered for them as well. Thanks for being the wonderful audience, and happy to continue the FFPAI Innovate webinar series for the continuous education. Over to you, sir.
Vibhakar sir. Sir, I also would like to request you, because now number of parents are staying alone in the India and their sons and kids are staying out of the country or settle in the other state. And many times now they are asking parents, daddy or mommy, you don't bother for earning for us, but you manage your account, you manage your total wealth, and definitely you see how to pass it easily to them when we are not here, sir. Exactly, because many a times my number of colleagues, we are in dilemma, how many accounts we are keeping, how much we have invested in mutual fund, in stocks, in estate, and how to collect it, whether we have to keep some single account or 2-3 accounts, or what to do at the age of 65, 70 and 75. If there is definitely some 24 carats guideline for that, so that our funds become very easier for them also, how they can collect, whether we have to keep the joint account, foreign country account, exactly NFO, I don't know, but they are asking that also. So I think we also would like to know regarding this thing also.
Very fair point, sir. And in the investment section, I would keep that in mind that for different age groups, the goals are different. Some age group has the goal of wealth creation. At a certain age group, the goal is wealth consolidation and legacy transfer. So for all these different goals, we will create a specialized material and we will give the best tips what to be followed at age 50, 60, 65, 70, etc. And especially in the case, I also have kind of observed that at times the children are living abroad, so there is also little complexity of passing the wealth from India to other nation as well. There are cases of NRE and NRO accounts as well. How to
NRE
take care of taxation part while transferring money between these accounts, etc. So that also we will incorporate. I have noted that down, and I will just read out one question that is there on our YouTube channel chat. Swastha ma'am has Swasth Dental Clinic. Yeah, Swasth Dental Clinic owner has put one question. Pratiksha, if you can take that up. The question is that can we claim 50% income under presumptive taxation, although the actual profit is more than 50%.
Yes, provided your gross receipts is less than 75 lakhs.
Yes, I hope that answers your specific query. You can always do it, provided to avail this benefit, your gross receipt, as Pratiksha said, has to follow the threshold.
And it should be out of professional income. Then only, like if business income is there, then need to be 8% of that minimum. And over we can show as much as we want.
Thanks, Pratiksha. The answer is quite nuanced. If it is a professional income, then the case little varies, and if it is a business income, then also it varies a little bit, with the threshold keeping in mind. Yes, Dr. Vibhakar, Dr. Vinod, anything else you want to share?
No,
And
sir.
or we will keep in touch, and I'll discuss with you, and we will share the new topic for the audience for the next financial Friday.
Sir, definitely I request you kindly, you just enumerate 5-6 points what we are going to discuss, so that the audience will be more receptive at that time.
Sure, we
Instead
will
of
do that.
only one single tagline, taxation planning for doctor.
Right.
Among that 5-6 more points we would like
Right.
to have, so that they may have some anxiousness. Oh, definitely we will attend this session, evening session for it.
We will create the e-invite, little more elaborate, so that in the invite only they know that what are the 5-6 points we will cover. We'll take care of that, and
Yeah,
thanks for the
Thank
feedback.
you, Chintan. Thank you, sir. Vibhakar sir, vote of thanks. Vibhakar sir.
Sir, you are on
Yeah.
mute.
On
Sir.
behalf of the Federation, bolo.
That's sir. Vote of thanks.
On behalf of the Federation of Family Physicians Associations of India and Finovet, I thank the audience for sharing this platform on a large number and becoming knowledgeable. I thank Madam Pratiksha Patni for sharing her valuable time with us and making us knowledgeable. I am sure in future we'll be having some more questions. We'll be ready for some more questions, and would expect you to answer and give us some more relief. Thank you.
Yes, sir. Thank you, sir. Anytime, sir.
Thank you, Mr. Chintan too. Really, we are thankful. Your concepts are really very clear. So thanks a lot on behalf of FAPI. Thank you, sir.
Thank you, sir. My pleasure.